Pablo, good to see you. How you doing? First one as always. Let's go, Pablo. How you doing? How you been, Pablo? Artistic, good to see you as well. How you doing? How you been? Good evening, Dog. Good to see you as well. How you doing? How you been? Good day, Miles. Good to see you as well, brother. How you doing? Good evening, Miles and family. Ian, good to see you as well. How you doing? Hello, Miles. T, good to see you as well. How you doing? Good evening, Miles. How you doing? I'm doing great, Callie. Good to see you as well. How you doing? How you been? What's up, brother? Muman, good to see you as well. How you doing? Good evening, Miles and CMF. Good to see you. How you doing today? I'm doing great, Carlos. Good to see you as well. How you doing? How you been? Good evening, Aaron. Good to see you as well. How you doing, brother? How you been? Okay, let's do intro. Did the Fed cut the rates today? Yes, they did, but we're going to talk about it. So, few things to go through on tonight's live, but before we do that, welcome to the CMF Live if you're watching this for the first time ever. The CMF stands for Crypto Miles Family. My name is Miles. You can tune to this live Monday to Friday, 10 p.m. London time onwards for the most recent news regarding cryptocurrencies, CBDCs, AI, politics, and regulations. Pretty much vital information for you to know about regarding the world completely transforming into a digital space. The disclaimer of this live, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. Now, this is episode 375 of the CMF Live right now. Everybody's watching. If you have already liked and retweeted this live on X, thank you so much, CMF members. And if you have already liked this live and you're watching this on YouTube right now, thank you so much as well. If you haven't, CMF members, take 5 seconds or even 2 seconds to like the live and retweet it if you're watching this on X right now. And if you're watching this on YouTube also, just take 2 seconds to like the live also. Now, today was a very important day. Today, a few things happened, which we're going to discuss on tonight's live. But the biggest thing we're going to talk about is the Fed rate cuts and essentially what's going to be happening now. And also what did Jerome Powell say straight after essentially cutting the rates and what's going to be happening next, in other words. Before we talk about that, let's go start a conversation first, and then we go straight into the first news. And I also sent out a tweet today to let everybody know essentially what has happened today and what's essentially going to be next. So let's go start a conversation first before we go through the first news. Let's see where we're at. We were here. Good evening, brother Miles and CMF. Free Feather. Good to see you as well. How you doing? Woodhouse, good to see you as well, brother. How you doing? Hello, Miles and my CMF. Let's go, Scott. Good to see you as well. I love and respect my family. Let's go, Scott. Me too. Now, Fed rate cuts. What actually happened today is what we're going to discuss. I'm curious to understand. You say that Jesus is God, but at the same time he was born of Mary. Well, if God is the one who created Mary, how can Jesus? I've never said that. I don't even know who you are. I'll be very honest with you. Okay, going back to crypto. I don't know what that was. Hi, Miles and CMF. George, good to see you as well. How you doing? Now, what actually happened with the Fed rate cuts? Bitcoin essentially slips below $115,000 after the Fed implements the quarter-point interest rate cuts. So today, Jerome Powell, for once in his life, he did something good, but the market didn't react it was supposed to do. It didn't go down, but it didn't react in a positive way, in an instant, essentially, way, in any sort of a way. So here is essentially what went down. Bitcoin is trying to steady its price above $115,000 after the United States Federal Reserve delivered a 25 basis point cut to interest rates, lowering the benchmark range to essentially 4% to 4.25%. The immediate crypto market reaction has been muted, with traders essentially digesting the central bank's cautious tone. Bitcoin's price briefly dipped below $115,000 and is currently attempting to close above the hourly candle above essentially the mentioned levels. The Federal Open Committee market, the FOMC statement today highlights that the job gains have slowed, unemployment has edged higher, and inflation essentially remains somewhat elevated. Notably, the Fed acknowledged that the downside risk to employment has essentially risen, tilting essentially the policy stance towards the dovish side. New projections essentially suggest an additional 50 basis points of cuts are expected through 2025, underscoring essentially the Fed's growing concerns over the balance of risk, while also the committee emphasized a continued commitment to its 2% inflation target. The tone leaned more towards supporting growth and employment in the face of slowing momentum. One distance essentially came from a newly appointed Fed governor, Stephan, essentially, who favored a deeper half essentially point cut, reinforcing the perception that the central bank is preparing markets for a more accommodative path ahead. Despite the dovish implementations, Bitcoin's reaction has been quite sluggish, not just Bitcoin's, the entire crypto space, with price consolidation dominating over essentially dictational momentum. Traders appear cautious, weighing the Fed's long-term easing trajectory against lingering uncertainty in inflation dynamics and global markets. So that's one of the factors essentially why the market is moving quite slowish to the reactions. One is because, well, there are other certain things at work right now with the inflation situation, the macroeconomic data and the yields and the dollar essentially not doing too well. If it does any worse, then we'll see the impact. But earlier today, Cointelegraph reported that the markets analyst Nick sees the risks of the Fed's rate cuts already being priced into the markets. That's another reason why the markets didn't react in an instant way. But there are many reasons which we're going to go through on tonight's live. Because the market's already priced in this type of scenario, essentially became sell the news reaction. But is a sell the news reaction going to be lasting too long? Essentially not whatsoever. While lowering borrow costs typically supports risk, essentially assets over time, traders warn that the initial optimism could fade quite quickly. This suggests that Bitcoin and broader crypto markets may face near-term volatility, even as long-term essentially outlook remains constructive under extended easing cycles. Right after essentially the FOMC announcement, Bitcoin's open interest surged, signaling that futures traders were positioning for heightened volatility. However, spot market activity essentially told a different story, with aggravated spot volumes continuing to decline even as futures volumes spiked. The market was moving essentially it was at a level of stagnation. In other words, no movement whatsoever. This divergence suggests that the current price action is being driven largely by leveraged positions rather than genuine spot demand. Without a stronger presence of spot buyers, the sustainability of a move remains uncertain, leaving the market vulnerable to sharp swings if leveraged positions are unwind. In other words, nobody's at today, half the market is essentially saying we've priced in this type of scenario happening, 25 basis cut rates, so which means the market shouldn't be moving any further up. The other half are shocked and still don't believe that the Fed rate cut is going to be happening. It's also based on what Jerome Powell said pretty much straight after, which is this. Jerome Powell has a tendency to say something positive and straight away ruin it by saying something negative. So this is essentially what I put out today. So on Twitter, on essentially X, the tweet that came out from Watcher.Guru says, Justin, Jerome Powell essentially says the Federal Reserve doesn't feel the need to move quickly on interest rate cuts. This was straight after the Fed rate cuts happened. Fed rate cuts happens, positive. Straight after the news that comes in is Jerome Powell says the Federal Reserve doesn't feel the need to move quickly on interest rate cuts, which is why people are like, okay, we don't believe his BS. Then I essentially sent out a tweet right underneath it, putting translation. Well, essentially that means, well, keeping dragging our feet while the markets beg for clarity. Jerome Powell's words always sound essentially calm, but the ripple effects hit very hard. Because there's a tendency of saying essentially something positive in the market space and then straight away something negative. The previous rate cut he did, he said essentially we're going to be doing rate cuts. The market was ecstatic. Straight away after, he was asked the question of, do you believe in cryptocurrencies? Or the Fed hold cryptocurrencies, which he went on a rant on against cryptocurrencies. So he went positive, rate cuts, negative, hates crypto. Same thing happened today again, where positive, rate cuts, negative, Justin, Jerome Powell says the Federal Reserve doesn't feel the need to move quickly on the interest rates. He does have a tendency to ruin anything he does. Now, following the Fed's announcements of his interest rate decisions, Jerome Powell essentially holds a live press conference straight after. Here are all the current highlights from Jerome Powell's speech straight after saying rate cuts. The unemployment rate remained low but increased. Inflation has risen recently and remains at a slightly elevated levels. Job growth has slowed and downside risks to employment have increased. Economic growth has slowed. The unemployment rate has not changed much compared to last year. The slowdown in GDP growth mainly reflects a slowdown in consumer spending. Employment growth has slowed significantly due to reduced immigration and falling labor force participation. Employment growth appears to be below break even. The labor market is not as active as before and is somewhat weak. Commodity inflation has accelerated and service inflation continues to decline. After next year, most indicators of inflation expectations are aligned with the 2% target. The overall impact of customs and duties on inflation is not yet clear. The baseline scenario is that the impact of customs duties on inflation will be short-lived. The risk of persistent inflation must be managed. Inflation risks tend to be on the upside. We have the ability to intervene in time. Politics is not a fixed course. The change in risk suggests that today's interest cut is appropriate. We are firmly committed to the independence of the Fed. The committee continues to consistently pursue its dual mandate objectives. Some tariffs do indeed impact the labor markets. In reality, they don't. Price increases due to customs duties are expected to continue this year and next year. Revised employment data suggests that the labor market is no longer robust. There is no board support for a 50 basis point cut rate today. We can think of today's discount as a risk management discount. The landscape of labor market risk has changed significantly since the last Fed meeting. The labor market is cooling, which means there needs to be taken into account in policymaking. Wage data is just one factor suggesting the labor market is cooling. We must continue to work essentially to regain 2% inflation. The risk of inflation raising is lower than in April. In their summary of economic forecast, policymakers outlined an interest rate roadmap that aims to reduce inflation to 2% over time. Inflation is expected to rise this year due to higher commodity prices as a result of customs duties, but is expected to be a one-time increase. There is essentially less evidence that inflation will rise essentially sustainably. If layoffs begin to occur, the unemployment rate could rise quickly because hiring rates are lower. The Fed makes decisions on a meeting-by-meeting basis. We will focus on the data. The Fed will not debate forecasts or attempt to reach consensus. Under essentially our current circumstances, it is normal for there to be a major difference of opinion. It would be inappropriate to essentially comment on the Fed member Cook's case, and I don't think a 25 basis point interest rate cut will have a significant impact. The entire trajectory of interest rates and expectations should be taken into account. So straight after he does essentially rate cuts, positive news for the market space going forward essentially. And coming out and saying all of that and ending with, it doesn't matter that I did 25 basis point, essentially 25 basis point cut, rate cut, nothing's going to happen. It's not positive for the market space in any sort of a way. Now, there are other things in play as well, but going back to essentially another tweet that I did today, Fed rate cuts impacts on crypto. Just so everybody knows, first day is always muted because the market is somewhat shocked, somewhat priced in. Day 2 to day 3, markets reposition, liquidity and risk appetite will lift prices slowly. 1 to 3 weeks, historically, rate cuts fuel upside via ETF inflows, weak dollar and lower yields. And the upside basis is 2 to 7 days, or 1 to 3 weeks is when we're going to be seeing the market move. Now that we've had rate cuts, brilliant. Moving forward, 2 to 7 days is when we're going to see the upside of the markets. 1 to 3 weeks is when we're going to see a bigger upside inside the market space. But again, Jerome Powell had to come out and say something positive and ruin it by saying something negative. But that's the timeline. If anybody's sitting at home right now wondering why the markets haven't moved off instantly, that's the timeline. It's always been the timeline. But also, it's just Jerome Powell has the tendency to say something positive and straight away ruin it with something negative. On his previous, essentially, rate cut, as I said, he said, we're going to be doing rate cuts, 25 basis point, market aesthetic. Straight after, he doesn't like cryptocurrencies. This time, he does rate cuts straight after. It doesn't matter that I've done this rate cut, nothing will happen. It's not positive for the market space. He did say quite a bit more, but that is the timeline. Even in the 2019 essentially rate cut that he did, the markets didn't move the first day. 2 to 3 days later, liquidity started moving about. So don't worry. But also, there are other things that are weighing in right now, which is China and the US situation. And it's this. It's the AI chip battle that's going on with China and the US right now, which means tech stocks are being impacted. And when tech stocks are being impacted, Bitcoin is being impacted. When Bitcoin gets impacted, everybody gets impacted due to not having regulations. The technological battle between Beijing and Washington reaches a new level today. Out of all days, today is rate cut day. It's supposed to be good news moving forward. And today is essentially the day that China and the US decide to go head on a tech battle. According to the Financial Times, China has ordered its digital giants, including Alibaba and ByteDance, to immediately suspend their purchases and tests of the latest essential NVIDIA artificial intelligence chips, which is not good for tech stocks. And again, tech stocks get impacted, Bitcoin gets impacted also. This decision illustrates the rising tensions around semiconductors now at the heart of the geopolitical and economic rivalry between two superpowers. The Cyberspace Administration of China issued a formal directive against several Chinese technology giants, including ByteDance and Alibaba. China's own government essentially has came out and told every single Chinese tech firm to stop buying any sort of essentially artificial chips, computer semiconductor chips from the United States. The order is clear. Immediately suspend all ongoing tests and orders related to NVIDIA's RTX Pro 6000D chips, which was specially developed to essentially for America's restrictions and advanced semiconductors. As during a press conference in London, Jensen, NVIDIA's essentially CEO, acknowledged the impact of this decision while adopting the measured tone. We can only serve a market if a country wants to do it, essentially to do business with us. He added, I am disappointed by what I see, but China and the United States have a broader agenda to resolve. I am patient on this. This statement comes as Beijing has just essentially accused Nevada of essentially violations of its anti-monopoly legislation and tense diplomatic exchanges and continues between these two countries. So not only has China's government told their tech firms to stop buying semiconductor chips from the United States, which impacts tech stocks, but China also said that they're suing one of the biggest semiconductor chip providers inside the United States today. In this context, the Chinese decision can be interpreted as a strict response to the American escalation on the front of technological restrictions. What distinguishes this ban from previous ones is essentially its scale. Until now, Chinese restrictions mainly targeted essentially the H2 chip, another version designed by NVIDIA to remain compliant with American sanctions. This time, Beijing directly targets the very latest generation, the RTX Pro 6000D, which has just been launched. This intensifies and reflects a strict shift from Chinese authorities, who no longer merely slowed down certain products, but now appear determined to actively break their dependence on critical technologies coming from the United States. Faced with the successive American restrictions on essentially advanced semiconductors, China, an influential member of the essentially BRICS bloc, is multiplying initiatives to support its own hardware and component players. Demand for the RTX 6000D was already limited even before the ban, with some Chinese companies deliberately choosing not to place orders. This could signal a growing confidence in local alternatives, even if they remain technologically inferior at this stage. China is essentially going for itself. In this climate, NVIDIA finds itself in a delicate position, deprived of strategic outlets. The company sees its prospects in China darken, with the potential impact on its revenue, particularly in segments related to AI and by extension sectors dependent on computing power like Web3. Today was the day of essentially rate cuts. They could have held off this announcement maybe 2 to 3 days, or maybe even essentially made this announcement before this type of scenario. But it seems like China wants to start developing its own semiconductors, even if it is going to be worse than what the Americans produced so far. But not good for tech stocks, not good for Bitcoin, not good in general for the entire market space, because we still don't have regulations, which means we can't decouple from Bitcoin's footsteps. Tech stocks go down, Bitcoin goes down, we go down. Is it going to be a long impact? Probably not. The suing of the companies, new one, to be fairly honest. Now, there was rumors that they were going to be sued, and they actually did get sued for a monopoly game scenario, essentially. But that also happened today. It wasn't just rate cuts day. It was essentially one of the biggest semiconductors in the US, one, being sued, two, China's not placing any more orders. But again, give it 2 to 3 days, the markets will move on and the liquidity will start to move about. Now, Bank of Canada is what we'll talk about next. Bank of Canada also cut its interest rates today to 2.50%. The Bank of Canada made headlines today by cutting its key interest rates by 25 basis points, matching the United States, bringing it essentially to take down the 2.50%. This move marks the central bank's first rate cut in the current cycle and could signal a broader shift in monetary policy after a long period of high interest rates. This decision comes in signs that the inflation in Canada is gradually essentially easing and economic growth is slowing. Many economists had expected this move, especially after recent data showed that the consumer price increases were stabilizing near the essentially BOC 2% target. Bank of Canada had essentially maintained a relatively high interest rate for the past 2 years in an effort to fight inflation. However, with recent economic indicators suggesting cooling consumer demand and a slowdown in GDP growth, policymakers have opted to ease borrowing costs to support the economy. Governor Tiff noted in a press conference that the central bank is encouraged by the progress on inflation and believes that monetary policies no longer needs to be restrictive. Lower interest rates could provide relief of essentially to borrowers, including homeowners with variable rate mortgages and small businesses facing essentially high financing costs. However, the central bank made it clear that it will continue to monitor inflation closely and may adjust this stance if necessary. The rates could essentially be the beginning of a new easing cycle, especially if inflation remains in check. It might also boost consumer confidence and improve conditions in the housing market, which has essentially seen a dip in activity due to high cost of borrowing. Financial markets have already reacted positively, with bond yields dipping and the Canadian dollar slightly weakening against major currencies. Economists now anticipating further rate cuts in the coming months if trends continue down this path. So, Canada also did rate cuts today as well. Didn't have much of an impact on the market space, I'll be honest. The American one is going to in about 2 to 3 days. It has to simmer inside the market space. Half the market space priced it in. The other half is shocked and still doesn't believe it's going to be happening. Also because of what Jerome Powell said next, which is essentially Jerome Powell says the Federal Reserve doesn't feel the need to move quickly on the interest rate cuts right now. He's announced them, but he doesn't believe he needs to move quickly on them. That is why the other half of the market space is like, we'll believe it when we see it. Now, before we go to the next news on tonight's live, let's go inside the comment section. But don't worry, as I said, 2 to 3 days. Historical data shows that. Let's go inside the comment section first before we go through the next news on tonight's live. And I also want to say thank you so much to Ian for the £20 donation. Absolutely amazing, Ian. Thank you so much for the £20 donation. Straight to the hedge fund. Let's go. Let's see where we're at inside the comment section. We were at here. Hi, Miles, it's CMF. George, good to see you. How you doing, brother? Mike, let's go. We got a lot of fish out there tonight, Miles. Facts. Chicken or beef. Beef for me. Evening, Miles, and CMF. Let's go, Jason. Good to see you. How you doing? Hi, Miles. Does this mean the bull run start or no? Give it a little bit of time. It's going to. Anyway, religion will talk in other programs. Yes, facts. Hi, Miles and CMF. Stormy, good to see you. How you doing? Good evening, Miles and CMF. Lena, good to see you. How you doing? What does this mean to ISO? It doesn't mean nothing to ISOs. This is in general for the market space. What a Tonker Powell is. There it is. Yeah. Hi, Miles and CMF. Golden Dragon, good to see you. How you doing? How you been? Hello, Miles and CMF. Comatose, good to see you. How you doing? Amazon Stone, let's go. Some of my portfolio is Filecoin, ACH, New Protocol, Quant. Thoughts on them? Still good for alt season. They're still good projects. To be fair, also still good projects. Miles, will the prices go flying in the next month because I'm done buying? Yes, crypto, don't give it a little bit of time. They will. Historically, it's 2 to 3 days you'll see liquidity start to move and inflows into the ETFs. And then about 3 to 4 weeks, you would see the market start to move actually based on those rate cuts. Now, crypto executives. Crypto executives today met with the US lawmakers to discuss the Bitcoin reserve and the market structure bills. Members of the US Congress met with key figures inside the cryptocurrency industry to discuss issues today and potential laws related to the establishment of a strict Bitcoin reserve and a market structure. A group of lawmakers that included Alaska Essential Representative Nick and Ohio Senator Bernie met with essentially the strategy co-founder Michael Saylor and others in a roundtable event essentially regarding the Bitcoin Act, a bill to establish a strict Bitcoin reserve. The discussion essentially was hosted by the advocacy organization Digital Chamber and its affiliates, the Digital Power Network and Bitcoin Treasury Council. This is essentially what was said. Legislators and the executives at yesterday's roundtable agreed that there is a need for a strict Bitcoin reserve law to ensure its longevity for American financial future. Haley Miller, Director of Government Affairs and Public Policy at the Digital Power Network, told Cointelegraph, most attendees are looking for the next steps, which may mean including the SBR within the broader policy framework already advancing. Separately, several essentially Republican lawmakers, including House Speaker Mike Johnson, House Financial Services Committee Chair French Hill, and Majority essentially Whip Tom Hemmer, met also today with executives from crypto companies, including Coinbase CEO Brian Armstrong, to discuss issues related to the industry. The talks include the advancements of legislations for market structures, essentially which the House of Representatives passed in July. Another roundtable discussion with the Republican leaders essentially on the Senate's Banking Committee, reportedly including essentially Wyoming Senator Cynthia Luminis, was held to consider the advancements of a market structure bill. Republican senators said their version tentatively called the Responsible Financial Innovation Act, which is the Clarity Act, which essentially is the Clarity Act is what's going to, in its own words, bring clarity towards the crypto space. That is going to give us the biggest push towards decoupling from Bitcoin, going to utilities slowly, and so on. Not overnight, as I always say, over time. The three roundtable discussions essentially signaled the Republican lawmakers were continuing to focus on legislations related to the crypto and blockchain industry after ending a month of long recess in September. The Bitcoin Act is expected to essentially solidify an executive order signed by US President Donald Trump back in March, opening essentially a legal avenue for Bitcoin to hold up to 1 million BTC in national reserves. The market structure bill, though still under discussions in the Senate, is expected to clarify the role US financial agencies would have in overseeing and enforcing regulations related to crypto. The Clarity Act is supposed to be at the end of this month, where they're going to have that discussion, have that round of votes, and a week later or so on, Trump is going to be signing it in. And when that happens, we have the Clarity Act, we can move forward slowly into utility. The event signals a pivotal phase in US crypto regulations with potential significant impacts on market structures and institutional investments, sparking a 30% surge in essentially Cardano, because Cardano's founder was also there. Charles, the founder of Cardano, participated in a significant roundtable with US Banking Senate Committee on cryptocurrency market structures and the Clarity Act. The event essentially today included key industry and legislative leaders. Key participants included Silvio from Algorand, Michael, the former CEO, the former SEC commissioner, and Chairman Tim Scott, the Senate Banking Committee. Cardano's founder essentially confirmed his involvements on social media, reflecting his active role in the crypto regulation discussions. He said, "See everyone there," essentially Hopkins expressed, showcasing his dedication towards shaping the future of regulations for cryptocurrencies. The participation of major players in the crypto industry signals a robust engagement with US regulatory bodies. Financial institutions like JP Morgan have increased their crypto exposure, highlighting institutional confidence in regulatory advancements. The roundtable's focus on the Clarity Act has implications for digital asset classifications, affecting key cryptocurrencies, in this case like XRP, Bitcoin, ADA, Ethereum, and so on. Institutional players responded positively, leading to substantial capital inflows in the sector. Historical trends do indicate that regulatory developments significantly influence market dynamics and institutional participation, and the Ripple versus SEC case previously established precedents affecting cryptocurrency asset classifications. Potential financial regulatory outcomes from the roundtables include clearer asset classification and reduced regulatory risk for crypto assets, and historical legislations impact assets' performance and capital exchanges within compliant protocols. So, Two roundtables, one Banking Senate Committee, the other one related just to Bitcoin essentially streak movement. The Clarity Act is what we need most out of everything. Once we have a Clarity Act, we can slowly move into essentially, utility, decoupling from Bitcoin, and so on. That's the biggest one we need. The Bitcoin streak, essentially, 1 million purchase of Bitcoin happens, doesn't happen, doesn't really matter. What does matter is the Clarity Act, because that is what's going to be impacting the entire crypto space, not just Bitcoin itself. Now, a basket of cryptocurrencies for the United States to be holding, that's also a positive note for the entire crypto space. And that is also something that we're going to be discussing a little bit later on tonight's live, a perspective coming from Ripple's own CEO, Brad. But the sit down that happened today, positive. A few positive things did happen for the crypto space today, even though Jerome Powell decided to ruin the moment. But there are a few things that did happen for the crypto space that were extremely positive. The sit-down roundtables that's been happening today, with the banking committee having discussions on the Clarity Act and the finance sector of cryptocurrencies moving forward inside the United States, and the other roundtable regarding a streak basket of cryptocurrencies and also a Bitcoin streak movement. Now, moving off that to the UK, because a few things are happening here now too, and that's mainly to do with Donald Trump. As some of you might know, or all of you might know, Donald Trump is right now in the United Kingdom. He's been invited twice. The second time he's been invited by the king. And because of his invite, essentially, we are slowly starting to see movements inside the United Kingdom, because the UK has always been the biggest ally of the United States of America. Some may argue it's a different country, but it is the United Kingdom. And we can definitely see the crypto hub is rubbing off Donald Trump into the United Kingdom, because as he's made essentially his plans, he came today, being invited by the king. Today also this announcement came. The UK Financial Conduct Authority advances crypto regulatory proposals for retail access. That's brilliant. The UK Financial Conduct Authority plans to align crypto regulations with traditional finance from October 8th, 2025. Retail access to essentially Bitcoin and Ethereum exchange-traded tokens will resume, transitioning oversight through formal consultations like the CP25-14 and CP25-15 and other cryptocurrencies. The UK Financial Conduct Authority, FCA, has announced plans to introduce regulatory measures aligning cryptocurrency oversight with traditional finance. This includes lifting bans on the CETNs, essentially the ETNs, essentially for Bitcoin and Ethereum by October 2025. The FCA's proposal signifies a shift that could impact how cryptocurrencies essentially is traded and regulated, stressing improved consumer protection. The market's reaction is critical as the UK is set essentially as precedents for a crypto oversight. The UK's Financial Conduct Authority is proposing regulatory changes to align crypto industry standards with traditional finance essentially frameworks. Key adjustments include allowing retail participation in crypto essentially exchange traded notes, the essentially ETNs, for Bitcoin and Ether from 2025. This adjustment could increase retail access to approved crypto assets if they comply with the FCA's recognized exchange listings. Following the Financial Conduct Authority's announcements, trading platforms, custodians, and stablecoins issuers must seek authorization, essentially a pass to operate inside the United Kingdom. The move highlights the FCA's goal for enhancing governance and compliance within the crypto sphere. The increased regulation is expected to positively impact liquidity and consumer protection in prominent cryptocurrencies. However, complex derivatives remain restrictive. The strategy integrates with the broader efforts in the EU and the US to standardize digital asset regulations. This approach parallels essentially with the MiCA regulations in the EU, indicating a potential global trend. The regulatory developments could result in more robust market infrastructures for cryptocurrencies like Bitcoin Ethereum, promoting institutional-grade custody and transparency. Anticipated benefits include enhanced market integrity and innovation within the financial systems, while historical bans essentially on the certain crypto derivatives reflected concerns over volatility. The FCA's phased approach seeks to balance innovation with risk mitigation. By October 2025, these regulatory changes may set a new benchmark for cryptocurrency market operations inside the United Kingdom. The FCA's phased approach is designed to ensure regulatory clarity and market stability while fostering innovation. The UK went from no crypto regulations, making some announcements of crypto regulations, then following up with nothing, going absolute silent, to now with Donald Trump inside the United Kingdom, The UK has once again opened its doors towards cryptocurrencies, and they're moving so fast that by October, the UK is getting ready to open its doors to cryptocurrencies to the retail section. That is a very big jump, a very quick jump, I would have to say, from making nothing, making some announcements, doing nothing. Trump comes over to the UK, news comes out today, FCA greenlighting cryptocurrencies for the retail section by October 2025. That is pretty damn impressive. And that is going to provide a lot of liquidity because institutions, the retail section, so on, they'll be more confident entering towards market space. That, again, is also big news for today as well. Also, today, this happened. SBI joins tokenized cross-border trials. Now, yesterday I made the announcements that the Swiss bank, for the first time, has done some sort of test trials on payments connecting the traditional financial space with essentially the digital market space, with the crypto space, in other words. And the Swiss banks were very successful, showing the world that you can connect both of these worlds together, traditional and digital. And well, SBI thought, well, if they're going to, seeing those results, we better jump on top of that too. And SBI is a big partner of Ripple too. Let's not forget. SBI Shinsei Bank, a leading Japanese financial institution, has partnered with blockchain-based settlement network Partir and digital asset firm essentially Decurrent to launch a trial focused on tokenized cross-border settlements. This initiative is a part of Japan's broader push to modernize its financial infrastructure using blockchain technology. The trial aims to explore how tokenized currencies can improve the speed, efficiency, and transparency of essentially international payments. Traditional cross-border settlements often suffer from delays, high cost, and limited traceability. By tokenizing assets and leveraging blockchain networks, transactions can settle nearly in real time with reduced counterparty risks. Partir, originally backed by JP Morgan, DBS Bank, and Teams essentially, brings its experience into interoperable essentially blockchain networks. Decurrent, a key player in Japan's digital asset ecosystem, provides the local expertise needed for integrating tokenized payments into Japan's regulatory framework. Together with SBI, the trio is poised to test the future of global finance. This trial highlights growing interest from traditional banks and blockchain-based payment solutions. Tokenized cross-border settlements could drastically cut down operational costs and minimize errors common in the legacy systems used today. Japan, known for its essentially cautious but steady approach to digital finance, sees this initiative essentially as a strategic step towards embracing financial innovation while also ensuring regulatory compliance. If successful, the pilot could pave the way for a broader adaptation across essentially Asia and beyond. It can also signal that banks are not waiting on central digital currency CBDCs alone. They're actively exploring alternative blockchain solutions for real-world applications. So SBI is about to be doing test trials essentially of cross-border payments, tokenized cross-border payments. We had Switzerland yesterday making announcements that their test was successful in terms of cross-border payments, the digital financial space connected to the traditional financial space. And now today, SBI wants to do similar tests, but introducing the idea of tokenized essentially notes as well. Now, before we go on to the next news on tonight's live, let's go inside the conversation first. Let's see what's happening there, and then we go straight into the next news on tonight's live. Let's see where we're at. As I said previously, this is live, which means if you do have any questions or statements, put it down in the comment section. I'm more than happy to help you out. Let's see where we're at. We were at here. Thoughts on Pump Fund. Meme coin, risk. Meme coin is all high risk, high reward, which means you could make a lot or you could lose everything. Not financial advice whatsoever. Be careful with meme coins. And if you talk about Pump.fund platform, I mean, it's the headquarters of all memes. Going for the backbone, maybe, but again, it's a high risk, high reward type of scenario, not financial advice whatsoever. Hi, Miles. Sorry, I'm half an hour late tonight. Hope I've not missed too much. Adi, good to see you. So how you doing, brother? You missed the beginning part where we talked about Jerome Powell, which we'll do essentially another towards the end of the live. I'll tell you what happened. You think HBAR is one to hold long term or take profits in the bull run? Also, XLM and XDC. I'm never selling my XRP, but like to know your thoughts on others. Okay, HBAR. Do I think it's a long term play? Yes, HBAR is definitely going to be a long term play. HBAR has embedded itself quite well inside the financial sector, and even within quite a lot of institutions that aren't related to the financial sector, to be fairly honest. So it can be a very long-term play. XLM, definitely long-term play. XDC, definitely long-term play. XDC also today, USDC has decided to start minting on essentially XDC, USDC stablecoin. I'm never selling my XRP. Good idea on that one, not financial advice at all. But yeah, HBAR, in my opinion, could be a very long-term play as well. We have one of the most credible crypto influencers online in Miles. You gotta love this guy. I surely do. Let's go, Scott. Brother, thank you so much for the kind words. Hello, my friend. Let's go, Scott. Good evening, Miles and CMF. Hope everyone is well. SB, good to see you as well. How you doing? What up, Miles and CMF? Ray, good to see you as well, brother. How you doing? What about HBAR, Miles, SEI, and Hot? HBAR, good. SEI, good. Hot, also good. They're all good, to be fairly honest. HBAR is obviously better than those two, but those two are still good in their own aspects. You think if I hold my XRP until 2027, Miles, I will be rich? I do have quite a bit of XRP. 2027 is essentially when the banks like HSBC Bank, Barclays, Lloyds Bank, Santander Bank have essentially made announcements that there are going to be no more banks on the high streets. There's no more banks on the high streets. Then there is an indication that the world should be at some sort of digital level. So 2027 is a good time frame if you're planning on selling. I wouldn't suggest it, and again, it's not financial advice at all. Commander, what's up today? How are you doing today? I'm glad you are here. Let's go, Scott. Happy Pisces. Good to see you. How you doing? Hello, Miles and family. Susie, good to see you. How you doing? Happy Pisces. Let's go. Now, Ripple. Ripple's CEO today made a very interesting announcement, which is regarding the crypto stockpile. You see, the first time the crypto stockpile was introduced on X, when it was tweeted out by Donald Trump, and they said essentially XRP, essentially Cardano, Solana, and so on are a part of the stockpile for the United States. And the Bitcoin maxis got extremely angry and said, how dare does Trump not mention Bitcoin, which then prompted Trump making another tweet and saying, of course, also Bitcoin and Ethereum. And then the Bitcoin maxis said Trump didn't mean it. He never said XRP is a part of it. Nobody said XRP is a part of it. It's never going to happen. It's just Bitcoin. Well, you fast forward to today when essentially Brad mentions XRP being a part of that crypto stockpile. So here it is. Ripple CEO Brad has confirmed that XRP will soon be a part of the US government digital asset stockpile. The announcement marks a milestone for XRP as it continues to gain broader recognition as a legitimate and stable asset. The government inclusion of XRP, along with discussions about the upcoming essentially ETF, signals growing acceptance of digital assets in the mainstream financial system. In a recent interview with Bloomberg, Brad revealed that XRP will be included in the US government's digital asset stockpile. This move essentially is a part of a broader plan to create a diversified reserve of digital currencies to strengthen the country's economic position. Brad emphasized that the addition of an XRP reflects the growing trust in asset stability and increasing role in global financial systems. The inclusion of XRP in the government reserve is seen as a significant step in the broader acceptance of cryptocurrencies by traditional financial institutions and regulators. Brad stated that the XRP's role in this new initiative shows how governments are starting to embrace digital currencies as a part of their long-term financial strategies. He added, XRP will be a part of a crypto stockpile alongside other major digital assets, suggesting that XRP will now be viewed not just as a trading asset, but as a trusted digital currency for institutional use. Brad also discussed the potential launch of an XRP ETF, which could open new doors for institutional and large-scale investors. The CEO mentioned that over 10 companies, including major firms like Bitwise, Franklin Templeton, have also submitted ETF applications with the US SEC. The potential approval of an XRP ETF is expected to increase liquidity and make it easier for institutions to enter the market space. An ETF would provide investors with a safer and more regulated way to invest in XRP. It could also pave the way for more widespread adoption among financial institutions that prefer regulated financial products. According to Brad, this ETF will allow large investors to safely enter the XRP market, his own words, which could further boost the asset's popularity. With the added regulatory oversight, XRP is expected to become more attractive to a broader range of investors, thus potentially increasing its value and essentially stability. The growing interest in XRP among institutional investors is becoming more apparent. Ripple's CEO noted that large financial institutions, hedge funds, and other big players are increasingly looking at XRP as a way to diversify their portfolios. Hence the reason why XRP ETFs have the most amount of application filings. The combination of government inclusion and the upcoming ETF is likely to create new opportunities for institutional investors seeking more secure ways to engage with digital assets. With more traditional financial institutions showing interest in XRP, the digital currency is becoming more integrated in established financial markets. Brad's comments suggest that XRP is transitioning from speculative asset to a more regulated and trusted investment option. This shift may encourage other governments and financial institutions to adapt similar approaches towards cryptocurrencies. As XRP gains more recognition, it could inspire other digital currencies to follow in suit, further blurring the lines between traditional finance and the evolving cryptocurrency market space. So even according to Brad's words, we could essentially see the upside on the ETFs happening. It's going to be huge. Brad talking about more institutions, more hedge funds, more companies are behind XRP than ever before, hence the amount of filings XRP has compared to other essentially ETFs out there. Also, Brad mentioning that XRP is going to be a part of essentially Donald Trump's big plan of a crypto stockpile. Though the Bitcoin Max has told everybody it's going to be Bitcoin only. On top of that, to add on top of that, Palantir founder today predicts that Ripple could challenge SWIFT. In a recent interview with CNBC, Palantir Capital founder Dan Morehead suggested that Ripple, the company behind the digital asset XRP, could compete with global payment giant SWIFT. Now we have CEOs of companies coming out on CNBC Business saying, you know what? Ripple can actually challenge SWIFT. Interesting. Because if you said that a long time ago inside the crypto space, people would have called you crazy. Ripple can't challenge SWIFT. SWIFT is too big to fail. But now you have CEOs coming on live, essentially business channels on CNBC Business, talking about how Ripple could actually challenge SWIFT for its money. This remark followed a question about which asset to watch after Morehead essentially had previously revealed significant positions that he also had in Bitcoin and Ethereum. Ripple's blockchain is primarily recognized for facilitating instant cross-border payments. The company works closely with banks, financial institutions, and governments to help them achieve these capabilities. This area of operation closely mirrors that of SWIFT, which dominates the global payment sector. The key difference lies in Ripple's execution. Its transactions settle faster, cost less, far less, thanks to its blockchain technology. In contrast, SWIFT continues to face challenges with transactions that often incur higher cost and take longer to finalize. Ripple continues to make streak moves to expand its influence in the financial industry. In one of the latest developments, the blockchain company partnered with Spain's banker, the BBVA, which we essentially talked about on this live, to manage the bank's cryptocurrency holdings, which includes Bitcoin and Ethereum and other cryptocurrencies. This partnership aligns with the ongoing progress of the Markets in Crypto Assets MiCA framework, which is gradually being put into place to support the growth and regulations of cryptocurrency-related innovations across the European market space. Notably, Ripple's global reach has become even more prominent following its landmark settlement with the US SEC Securities and Exchange Commission. A pivotal moment for the company and the industry at large. Ripple has also made significant inroads in Africa, where it partnered with local startups to enable cross-border payments using $729 million in stablecoins. This partnership marks a significant expansion of Ripple's core services in emerging markets. We went from SWIFT is too big to fail. If anybody ever came out inside the crypto space and said that Ripple could one day take over SWIFT, crypto influencers would have essentially called you crazy, stupid, you don't know what you're talking about. But now that you have a CEO of a major head company coming forward and saying, you know what, Ripple could actually challenge Swift for their position. Not so crazy now. Adding on top of that, Vivo Power, which essentially shifts its focus to XRP treasury strategies. Now, we've talked about Vivo Power previously, how they're essentially expanded into XRP and essentially said they're going to be doing more things on the XRP ledger. Vivo Power International PLC plans to acquire XRP at a 65% discount, shifting focus to digital asset treasury management starting May 2025. It announced essentially on the Nasdaq. This pivot essentially signals growing institutional interest in XRP, contrasting with essentially traditional crypto assets, highlighting Vivo Power's unique streak approach within corporate treasury management. Vivo Power's international pivots to an XRP-centric treasury strategy backed by a $121 million investment so far, highlighting its shift from sustainable energy to digital assets. Vivo Power International PLC shift its business strategy to focus on digital asset treasury management strategy, centering only around XRP. This change represents a significant pivot from their previous role in sustainable energy solutions as the company explores new markets. Because beforehand, Vivo Power said, we're focusing on this digital market space, which is XRP for us, and also essentially the energy solutions market side as well. Now, Vivo Power is singing a different tune. They're only going to be focusing on XRP. I think they can start to see I think they're starting to see the future. Hence why they're not saying we're also in this market space and that market space. Now they're just saying we're in XRP. The company has enlisted essentially Carter Digital, its subsidiary, to expand its mining operations, marking a substantial change in its business model. This new focus involves converting mined tokens into XRP at an essentially 65% discount, aiming to strengthen its financial position. This strategy impact is evident in the $121 million private placement led by Prince Abdulaziz of essentially Al Saudia. This significant backing underscores confidence from institutional investors in Vivo Power's new direction and indicates potential market interest. Their investors are also actually happy that this company has become only XRP focused. The $121 million private placement demonstrates our strong commitment and confidence in Vivo Power's innovative pivot towards digital asset treasury management. This move could have positive financial implications by leveraging XRP's market position and technology. By investing essentially in Ripple Labs equity and using Flare Network for yield generation, Vivo Power is creating a multifaceted approach to its treasury strategy. Vivo Power XRP focused essentially strategy aligns with a broader corporate cryptocurrency trend where firms like MicroStrategy essentially integrate digital assets into their treasuries. However, their focus this time around is on XRP, and mining-based discounts is a novel, distant approach in this space. Analysts highlight that Vivo Power's adoption of essentially multi-layered strategy mining equity and yield could set a new standard in corporate crypto engagements. Such pioneering actions could potentially influence future cryptocurrency adoption among similar enterprises. So if you are a bit down today after Jerome Powell's essentially rate cut, but then rant, if you are a bit down today, don't be, especially if you're someone holding XRP, because a lot of positive things happened today and are still going to be happening as we move forward. But the biggest announcements today, 1, yes, we did have rate cuts. 2, Jerome Powell decided to go on a rant straight after rate cuts. 3, China essentially going head-to-head with the US in terms of semiconductors. All of that was the negative part of the space. The positive part of the crypto space for today was 2 to 3 days, we're going to start seeing liquidity start to move slowly into the market space, especially through essentially ETF inflows of Bitcoin, Ethereum, and so on. 3, essentially on the good side. 2, let's not forget we still have the XRP ETF. 3, let's not forget all the news that I shared today in terms of XRP, essentially in terms of Vivo Power just shifting their focus towards XRP. Head of a major CEO company coming forward and saying, you know what, Ripple can actually challenge essentially Swift for their money on CNBC Business. 4, let's not also forget that Brad did come out today essentially on Bloomberg and actually say that XRP is part of the US essentially basket of cryptocurrencies. And then 5, the United Kingdom and the US are actually about to move forward and bring liquidity towards the crypto market space. So we did have some negatives today, But the positive notes are 2 to 3 days, market will start. You'll start to see the shift in the market happening 2 to 3 days after essentially the rate cuts. Day 1 in rate cuts, not much happens. Day 2 to 3 is when liquidity starts to move slowly. In about 2 to 3 weeks, you'll see bigger movements inside the market space. But again, this month is still very special, which is 18th. We're supposed to be having that XRP ETF if the SEC doesn't put its foot down. At the end of the month, we're supposed to be having the Clarity Act if the senators or the governors don't change their essentially opinion on the timelines. But nonetheless, there is still extremely positive news today that happened and positive news going forward for the market space. On that note, we have reached the endings of tonight's live. Tonight was actually just an hour live long. Normally it's an hour and 10 minutes, hour and 15 minutes, but today we finished on an hour on the dot. So those are all the things we talked about on tonight's live. We talked about essentially SBI, also the Japanese partner that Ripple does have, who's about to be entering the tokenization of essentially cross-border payments, similar to something that the Swiss banks did yesterday, but they're doing a version of tokenized essentially trading as well. Other things that we went through on tonight's live regarding the SEC roundtables that's going on, essentially all the positiveness coming out of that very soon, we're going to be seeing added towards the Clarity Act, the roundtable for the Senate Banking Committee, and the other roundtable for the Street Bitcoin Reserve and the crypto stockpile. Those things are going to be added towards the essentially Clarity Act, which is the main thing that we need. We get a Clarity Act, which I've always said is the biggest thing that could happen towards the crypto space, is the damn Clarity Act. We get a Clarity Act, we can finally start moving forward on a positive note of decoupling and going towards utility. So, we have reached the endings of tonight's live. And once again, for anybody that did tune in a bit late, the timeline is for after rate cuts. As always been, day 1, muted. Day 2 to 3, markets reposition, liquidity and risk appetite will start to essentially lift into prices. 1 to 3 weeks, historically, rate cuts fuel the upside via ETF inflows and weak dollar essentially and yields. On the upside basis, 2 to 7 days or 1 to 3 weeks. Straight after rate cuts, we'll see those movements happening. So, before we go, obviously, let's start the comment section first. Let's see where we're at. We were at here. Miles, if you had extra money, would you put it in XRP, XLM, XDC, or elsewhere? Yes, always. Will XRP have an ETF this week? We're about to find out on the 18th. Evening, Miles. How's it going, brother? Paul, good to see you. How you doing? Will Ripple get its banking license this week or soon thereafter? It's going to go a little bit of time for that one. Morning, Miles, CMF. Shelly, good to see you. Morning. How you doing? Wow, let's go Miles and XRP. Let's go T. I agree. Let's go Night Miles and CMF. Pablo, see you tomorrow, same time as usual. Good night, Scott. See you tomorrow, same time as usual. Share the live. Hit the like button too. Let's go, Scott. See you tomorrow, same time as usual. Great job, Miles, as always. Let's go. Thanks, Miles. Have a good night and see you tomorrow, same time. Artistic. See you tomorrow, same time as usual as well. Sorry I'm late, but I'm going to watch you live again. Have a nice sleep, my friend. See you tomorrow. Carl, see you tomorrow, but at the same time as usual. Thank you, Miles, and good night, all. Let's go, Stormy. See you tomorrow, same time as usual. We appreciate you, Miles. Good night, family. Lena, let's go. See you tomorrow, same time as usual. Outstanding. Take care, Miles and CMF. Ray, see you tomorrow, but at the same time as usual. Hello, Miles. Another great program. That was entertaining. Let's go, Scott. Good night, Miles. Thanks for the positive news. See you tomorrow. Free and forever. Let's go. See you tomorrow, same time as usual. Ray, see you tomorrow, same time as usual. Miles, that's all you do. Let's go, Scott. Great live, Miles. Thank you. Good night, Miles and CMF. Jason, see you tomorrow, same time as usual. Thank you, Miles and CMF. Good night and see you tomorrow. Mike, see you tomorrow, same time as usual. Jason, good night, Miles. Khalid, see you tomorrow, same time as usual. Share the button, share the program, and hit the like button, guys. Facts, yes. CMF members, forget to ask you about your new Super AI. What is your opinion? There's a new crypto project called Super AI. I'll take a look into Lena and give you a perspective tomorrow, or just put a comment outside the live. If you want on YouTube, just put a comment outside on the video, and I'll reply back to your comments, no problem. I'll watch the replay. Thanks, Miles. Let's go, Shelly. Thanks, Miles, on the recap that I've missed at the start, but I'll watch the full recording again in the morning. Let's go, Addy. See you tomorrow, sometimes usual as well. Shelly, see you tomorrow, sometimes usual as well. I will see everybody tomorrow, same timing as usual. Olina just direct messaged me on Telegram, and I'll get back to you on that specific crypto project. I will see everybody tomorrow, same timing as usual. Thank you so much to everybody who has liked and retweeted this live on X. If you're watching this on X, thank you so much to everybody who's liked, essentially, if you're watching this on YouTube. I will see everybody tomorrow, same timing as usual. Everybody have a great day or a good night, depending on where you're around the world. See everybody tomorrow. Love you all.